Take a quick peek inside your wallet. What do you see? A debit card or a credit card? Maybe both? You use them every day. But do you really know the difference? And which one is truly better for your financial health? It's a question we all face. And today, we're settling the score once and for all. This is the ultimate showdown. Credit cards versus debit cards. We're going to dive deep into what makes each one tick, bust some common myths, and by the end of this video, you'll know exactly which card to whip out for your next purchase. So, grab a seat because class is in session, and this is one lesson that could save you thousands. Let's start with the basics. What exactly is a debit card? Think of it as your digital checkbook. When you swipe or tap your debit card, the money is pulled directly from your checking account. It's your money, right there, right now. There's no borrowing involved, no bills to pay later. The transaction is immediate. If you have $100 in your account, you can spend up to $100. Simple, right? This direct link to your own funds is the key feature of a debit card. It's incredibly straightforward and a fantastic tool for managing your spending in real time. Because you can only spend what you have, it's virtually impossible to go into debt using it. For anyone who's just starting to manage their finances or wants to stick to a strict budget, a debit card is like a trusted best friend. It keeps you honest and ensures you live within your means. Now, let's switch gears and talk about credit cards. A credit card looks and feels just like a debit card, but it works on a completely different principle. When you use a credit card, you're not spending your own money. Instead, you're borrowing money from the bank that issued the card. It's a short-term loan for every purchase you make. At the end of each month, the bank sends you a bill or a statement listing all your purchases. You then have a choice. You can pay the full amount back, or you can pay a smaller minimum amount. If you pay it all back by the due date, you pay no extra fees. But if you only pay the minimum or carry a balance, that's when interest kicks in. And that interest, often called the APR, can be quite high. This is where credit cards can get tricky and where people sometimes get into trouble. So, a credit card is a tool for borrowing, offering you flexibility, but it also comes with the responsibility of paying that money back. So, we've got debit cards using your own money and credit cards using the bank's money. Let's talk about the first major battleground, building your credit score. This is a huge one. Your credit score is like your financial report card, and it affects everything from getting a loan for a car or a house to the interest rates you'll pay, and even renting an apartment. Here's the critical difference. Using a debit card has absolutely no impact on your credit score. Zero. Since you're just spending your own money, there's nothing to report to the credit bureaus. You could be the most responsible debit card user in the world, and your credit score wouldn't budge. On the other hand, using a credit card is one of the primary ways to build a credit history. Every time you use your credit card and pay your bill on time, the bank reports this positive behavior to the three major credit bureaus: Equifax, Experian, and TransUnion. Consistent, responsible use shows lenders that you're a reliable borrower. This builds a strong credit history and increases your credit score over time. So, if you're looking to build or improve your credit, a credit card isn't just an option. It's practically a necessity. In this round, for building that all-important credit score, the credit card is the undisputed champion. Next up, let's talk about something we all love: rewards and perks. Have you ever gotten cash back on a purchase or earned points for a free flight? If so, you were probably using a credit card. The world of credit cards is filled with incredible rewards programs. You can find cards that offer a percentage of your spending back as cash, sometimes with higher rates in specific categories like groceries or gas. Other cards offer points or miles that can be redeemed for travel, merchandise, or gift cards. Many premium credit cards also come loaded with extra perks like travel insurance, extended warranties on your purchases, access to airport lounges, and special event tickets. Now, what about debit cards? Well, this is where they fall short. While some checking accounts linked to debit cards might offer a tiny bit of interest or have some minor perks, it's nothing compared to the universe of credit card rewards. For the most part, when you spend $1 with your debit card, you get $1's worth of goods, and that's it. The transaction is over. Banks just don't have the same incentive to offer big rewards on debit cards. So, if you're a savvy spender and pay your balance in full every month, using a credit card for your everyday purchases is like getting a discount on everything you buy. In the battle of rewards and perks, the credit card takes another decisive victory. All right, let's move on to a really important topic: fraud protection and security. Imagine you lose your wallet or a sneaky scammer gets a hold of your card number. What happens next is vastly different depending on whether it was a credit or debit card. With a credit card, federal law in the US provides robust protection. The Fair Credit Billing Act limits your liability for unauthorized charges to just $50. And in reality, most major credit card companies have a zero liability policy, meaning you won't be responsible for a single penny of fraudulent charges. When fraud occurs, it's the bank's money that's been stolen, not yours. You can report the charge, the bank investigates, and while they do, that money isn't missing from your life. Now consider the same scenario with a debit card. When a thief uses your debit card, that money is gone directly from your checking account. That could be your rent money, your grocery money, your emergency fund. It's your actual cash that's been taken. While you do have some protections under the Electronic Fund Transfer Act, they are more time sensitive. You need to report the fraud quickly to limit your losses. Getting your money back can be a much slower and more stressful process. It can take days, sometimes weeks, for the bank to investigate and return the funds. During that time, your account is empty, which can lead to bounced checks and other financial headaches. So, when it comes to protecting you from fraud, the credit card offers a much stronger shield, making it the clear winner for security. But hold on, it's not a total knockout for credit cards just yet. Debit cards have a massive advantage in one key area: debt prevention. This is their superpower. Since you can only spend the money you actually have in your account, it is impossible to overspend and fall into debt with a debit card. It's a built-in budgeting tool. It forces you to be aware of your account balance and live within your means. For many people, this simplicity is a huge relief. There's no monthly bill to worry about, no due dates to remember, and absolutely no risk of accumulating high-interest debt. Credit cards, as we've discussed, are a different story. The temptation to spend money you don't have is very real. It's easy to swipe for a purchase you can't quite afford, telling yourself you'll pay it off later. But later can quickly turn into months or even years of carrying a balance and paying a ton in interest. Credit card debt is a serious problem for millions of Americans and can become a major financial burden that's difficult to escape. So, if you know you struggle with impulse spending or find budgeting difficult, a debit card provides a safety net that a credit card simply doesn't. In the fight to keep you out of debt, the debit card is the undefeated champ. So what's the final verdict in this epic showdown? As you've probably guessed, there isn't one single winner for everyone. The best choice depends entirely on you, your financial habits, and your goals. Let's recap. Credit cards are fantastic for building your credit history, earning valuable rewards, and providing top-notch fraud protection. They are powerful financial tools when used responsibly. That means paying your balance in full and on time every single month. Debit cards, on the other hand, are the champions of simplicity and debt avoidance. They are perfect for managing your daily spending, sticking to a budget, and ensuring you never spend more than you have. They offer peace of mind and are an excellent choice for anyone who is debt-averse or just starting their financial journey. So, what's the ultimate strategy? For most people, it's not about choosing one or the other. It's about using both, strategically. Use a credit card for your planned purchases, groceries, gas, bills, the things you've already budgeted for. This way, you can reap all the rewards and build your credit score. Then, pay off that credit card bill in full using the money from your checking account. Think of it as a two-step debit transaction. Meanwhile, you can use your debit card for pulling cash from an ATM or for small spontaneous purchases where you want to feel the immediate impact on your budget. By combining the strengths of both cards, you get the best of both worlds: the rewards and protection of credit and the discipline of debit. You build a strong financial future while staying firmly in control of your money today. Thanks so much for watching. I hope this breakdown helps you make smarter choices with your cards. Which one do you prefer to use, and why? Let me know down in the comments. I'd love to hear your strategies. And if you found this video helpful, don't forget to hit that like button and subscribe for more financial tips. See you in the next one.